Palantir is up 80% in the last 1 year. And there's a lot of things that I think you should know before you invest in Palantir. And you already have invested. These are things you ought to know. Now, guys, there's a lot of great information on Palantir. First off, $51 billion market cap. In and of itself, buying every share outstanding. Enterprise value is $48 billion. The difference is the net debt. Guys, 95 out of 100 times, 98 out of 100 times, this number is bigger than this number because this number includes the debt. If it's lower, it means there's net cash on the books. They have more cash than debt. That is freaking awesome. It is so hard to go out of business when you have more cash than debt. They could write a check, pay off all their debt, and still have $2 billion extra in cash. So really, the price you're paying for the business is the enterprise value. Another thing, free cash flow, $640 million last 12 months. Net income, $300. Free cash flow greater than net income. 5-year average net income, a negative $465 million per year. 5-year average free cash flow, $170 million. So they have considerably more cash flow than net income. I would focus on that right now. This is their last quarterly report. Growth of 21% year over year on revenue, 6th consecutive quarter of GAAP profitability. Great stuff right here. Like I said, 21% year over year. U.S. commercial revenue grew 40% year over year, 14% quarter over quarter. The customer count grew 69% year over year and 19% quarter over quarter to 262 customers in the U.S. commercial business. Guys, all of these stats are incredible. Just great growth numbers. You know me. Whenever I look at a company that's growing and losing money, I look at that cash flow. I see that cash flow being greater, and I absolutely love it. I see all these metrics. I absolutely love it. Are there going to be issues with Palantir? Listen, the biggest issue is, what do? They say, we use data to solve government and company problems. Now, I'll be honest with you. I don't know exactly what that means, but I get the idea. Is it a consulting? But they go in there and say, listen, what problems do you have? What data do you have? How can we use your data to solve that problem? That's my guess of what it means. Have I looked into it? I have not. Why? Well, I don't need to do a deeper dive. The numbers are still questionable in terms of, do I want to buy this company or not? Let's keep in mind, even based on free cash flow, it's selling for 80 times last year's free cash flow and 300 times the last 5-year free cash flow. Now remember, guys, if they're going to double their free cash flow every single year for the next 30 years, I would pay this price all day long. That's the question. Are they going to be able to grow at some insane rate that justifies today's price versus the value? That's where we have a question here. Let me show you guys some of this revenue growth. Let's go to the income statement. And we're going to do quarterly income, not annual. Goes all the way back, right? It goes even further. But look at this quarterly income. 430, 445, 473, 477, 508, 525, 533, 558, 608, 634. Every single quarter has growth. That is awesome. I love it. Let's go look at the cash flow because that's what's most important with this company right now. Cash flow, free cash flow, cash from operations less your capital expenditures. 87, 20, 57, 32, 74, 182, 86, 132, 296, 126. A little choppy, but still, look how many quarters in a row of free cash flow there is. That sure beats their net income. That's what's incredible here. Their net income only has 6 quarters in a row of positive net income. We're looking at many, many quarters of positive free cash flow, which is a great sign for a company like this. Now, before you get too excited, software businesses get a big premium. When a company's hard to understand because their cash flow is different from the net income, I always like to compare price to sales. The price to sales on Palantir is 21.8. Let's go look at a company like Microsoft. Now, Microsoft is one of the 2 best software businesses, in my opinion. I think it's overpriced. It's 13.5. But Microsoft doesn't have the growth potential that Palantir does. But again, I do think Microsoft's overpriced. Okay, what about Adobe? Another software business that I would give away my firstborn child to buy at a reasonable price. They're at 11 times free sales. So 21 seems pricey, but again, a lot of growth potential there. So let's go back to Palantir and see what analysts are saying here. Well, let's look at the 8 pillars first. This 8 pillars, one thing stands out at me. Shares outstanding, tripled. Remember, 200% growth doesn't mean doubling, it means tripling. Guys, why are they issuing so many shares? You issue shares because you need the cash, which they don't need, or the stock price is way too egregiously high and the executive team wants to take advantage of that, or they issue so much stock-based compensation that they're all being cashed in and it's issued diluting the crap out of people. I hate that. I absolutely hate that. So that's my big red flag on the numbers part of Palantir. But guys, it took quite a bit for me to find some numbers that made me go, I hate this, right? So I'm pretty happy about that right now. Let's see what analysts are saying. Analysts, I'm actually surprised by this. 34 cents a share in profit this year, going to 83 cents in the next 2 or 3 years. Big time growth, but not as much as I would have thought. But again, it's earnings per share, not free cash flow. Let's look at revenue growth. Big time revenue growth. 2.77 billion to 6.5, 22%, 18.9, 21, 33, 23% revenue growth. And with a company with 80% gross margin, that means every extra dollar they bring in, 80% of that can essentially go to the bottom line before taxes. That's incredible. This company has the justification for a premium. Now, let's approach more of the qualitative parts because, guys, look at this company. Look what this company's done in its past. It hit $45 a share. Back on all-time high, $45 a share, back on January 27th, 2021. It got as low, somewhere in here, around $5.65 per share or something like that. That's a big drop. You guys all know that other YouTube channel that's a financial shenanigans, financial manslaughter channel from the guy who's in Israel or Russia or Timbuktu, who knows where he's at. And he was talking about $45 a share and Palantir is going to 500. Palantir could go to 500, but not because the stock rose up. This stock declined big time. And I was interested at $5 a share, never hit my price. But there are other issues with Palantir that I'll just get into in just a few minutes about why this is the emotional part. People who bought, and we have people in our community who bought sub 10 and they are loving it and recently hit a high of $27.50. Big time high just 2 months ago. You sit there and say, okay, did I miss out? Did I not miss out? Guys, I don't know what's going to happen in the next few months, in the next year. We don't know what's going to happen. Who would have thought that $5.65 would become $27.50 here? I didn't guess that. You didn't guess that. We all look at Carvana, another company that went down to $4 a share and then skyrocketed. But in the long run, stocks are a weighing machine. In the short run, they're a voting machine. And right now, Palantir is winning in a landslide. Here, they were getting crushed. That's all perceptions. And we don't know when perception will change, when it won't change. The big key for you as an investor is how do you buy based on fundamentals and then hold based on emotion? So if you want to get better at the emotional side, it's what's going to make you the most money, click the link below, join our community, check it out. It's awesome. It'll make you, if you're able to use it to handle your emotions better while you use our tools, you're going to become a much better investor. Now, here are the qualitative parts of Palantir that I don't like. Guys, 2 things. I do think that Palantir does things on their books that allow them to match or beat earnings per share. And it bothers me because I look at it going, but their cash flow is so good. Focus on your cash flow. But there's some things that make me go, what's going on here that we found where they put an asset in their books, adjust the price, it beats by a penny, et cetera. It kind of sucks. Second thing, Alex Karp, their CEO. This is completely superficial of me. But if your CEO looks like this, you're probably going to jail. Now that's a joke from that. There's a little meme on the internet where it says, if your accountants wear this shoes, then you're probably going to jail. Guys, you know me. I'm a very aggressive personality. I have no problem calling somebody out. There's a reason why I stepped down as CEO of my own company 3 or 4 years ago, because I realized that's not what was needed in order to make my company better. Alex Karp has a personal vendetta that I think is damaging to its shareholders. Palantir CEO Alex Karp says he loves burning the short sellers who bet against great companies to fund their cocaine habits. Alex, focus on building a better company. That's how you burn the short sellers. You don't burn the short sellers by doing stuff like this. And it might end up biting you in the ass at some point in the future because in all likelihood, your stock is probably overpriced. I look at this saying, do I want my CEO worrying about what short sellers are doing? I'm going to tell my CEO, focus on building a better business. And that alone gets me to go, gosh, do I really want to be part of Palantir? Look at Elon Musk. He was a god for a long time. Then he wasn't a god anymore. It's like you sit there and say this, like, people have changed on Elon Musk so quickly. And Elon Musk built an incredible company. Palantir is still in the making. And don't get me wrong, Palantir has a lot of potential based on the numbers we're seeing here. But again, I look at it going, what the heck is going on? And Peter Thiel, who started Palantir, I have a lot of respect for as a business person. He's a chess player, all these great things he's done. And I look at it going, Peter, just tell your guy to shut the F up. You found Zuckerberg. You were able to manage Zuckerberg, manage Alex Karp. Because this guy, I think, he's more interested in hurting other people than building a great company. Go build your great company. So even with that in mind, what is the company worth to investors? Well, let's pull up the last time I did Palantir. February 5th, I did revenue growth, low, middle, and high for 10 years of 8, 16, and 24. Very aggressive all across the board. 8% should be easily attainable. 24% would be very, very difficult, but not unheard of. 16% somewhere in the middle. Profit margin, I did 15, 25, and 35. Guessing, because I don't have any history to really go against. Free cash flow, I did 20, 30, and 40%. I did PE of 15, 20, and 25. Same with price of free cash flow. And what is it worth today? Based on a 9% return, no margin of safety involved. The market does 9 or 10%. I put in 9%. But in order to buy an individual company, you need to have some sort of margin of safety. If you're just going to go for 9 or 10%, just buy a long-term ETF. But if you want to buy an individual company, put in margin of safety with a higher desired return. I hit the analyze button. The stock's currently at 21. I have a low price of $3 to $4 a share, a high price of 37 to 40, middle price of 12 to 15. It's on my watch list at $10. Guys, thank you for your time. Take care.